Let me also welcome on board Sandip Sabharwal then. Sandeep, hi, good morning. What's the take? How is March likely to be? So far, it was not just a Fab Friday, but a Super Saturday as well that we had. We're almost clocking in 22,500 on the futures already.
Yeah, so I think Indian markets are tracking global markets and what's happening in the US market specifically, where we've seen the markets continue to rally and move towards new highs. And that's the same thing which is happening in India also. So I think right now we are at a phase where some people are on the sidelines, some people are scared of buying, many are confident, but no one wants to sell unless and until they see a fall coming. So I think some people sold earlier, then the market continued to rally. Now people are scared to sell. So I think it's a scenario which is set up for a correction at some stage. Now, uh, Jan, Feb were the months where I thought we should get a correction, but markets remained largely flat. So I think somewhere in the next 2 months we'll see some sort of sell-off, and as that plays out, I think that will be an opportunity to buy again. So I think it's time to hold on to some companies which are doing well and wait patiently to buy new ones.
Sandeep, I go back to the question which I've asked everyone. I've asked you, what explains this sudden surge in Reliance? I mean, it is turning out to be the stock of the year. 15% is what it has gained this year.
Yeah, so I think in most of the large cap companies, if you see, it's about a catch up. So companies tend to underperform, and then people realize that this is the one which has not moved here. Valuations are comfortable, and then they move up. Secondly, the huge rally in Geo financials also has played a part where uh, now what is leading what becomes a question at some point of time. But I think the rally in that stock has led to a rally in Reliance because of the embedded value of Geo Financial within Reliance, and then people in general being positive on companies which are going more on the renewable space, and Reliance has announced large plans on that. So I think that's having a positive runoff. So I think these are the factors which are there. But a big part is due to Geo Financial and the fact that there's a catch up happening.
There's some fresh reports this morning, Sandeep, about how Britannia might be exploring JVs to enter the high margin categories such as chocolates, fresh dairy, salty snacks, etc. as well. Do you think this is the way to go for Britannia? They have been stuck in a range both in terms of the prices as well as results. They haven't surprised or disappointed in a big way. Have pretty much fallen off the radar of investors as well. What's the view on Britannia?
Britannia is a great company because of the brand it holds and its market positioning in whatever segments it operates in. So post COVID, we saw a huge run up in the stock as well as their performances, because they actually on the consumer side, that's been one company which has significantly outperformed most of the quarters. Like a few quarters have been slow, but in general they have also managed the input cost pressure very well. I think this is a good initiative, I would think, because they have the wherewithals to make products and product segments successful. So if they enter into new segments which they believe are high growth, then currently small but can grow. I think if there's one company which can do that, it could be Britannia. So I think it's a good move and could have positive rub-offs on the stock.
Scanning through lots of stocks here. One stock which is in news is Swan Energy. It's in defense, other areas. They've raised a 4,000 crore QIP. They've repaid debt. And it's gone from what, 300 rupees, 350 rupees to 700 rupees. There are a lot of these mid-cap stocks which are suddenly going against the nature of the market. Sandeep, we've seen large part of pre-election excitement which got captured immediately after the state election outcome when we saw that giant move in Nifty. Are we in for some more pre-election action this time around, or that is something which is unlikely to happen in 2024?
I think the election factor has been already factored in. I don't think that's coming in anymore. In fact, if the performance of the ruling correlation is not as good, then we could actually see a negative reaction post elections, but that's a low probability event. Overall, now it's back to global trends. So I think these days events get factored in very fast. So I think post the state elections, the Nifty outperformed and it factored in the political developments very fast. And then you go back to following global cues. So I think global cues become most important at this stage when markets everywhere are moving towards new highs and without any significant correction. So I think that's the scenario we are in. And eventually, I think it's the US market which will correct at some stage and lead to other markets also correcting.
So only sell when US markets correct? I mean, is that a very simple strategy that, okay, rather than saying, okay, this is sasta, this is mehenga, time the market, just sell when we see a sizable correction in US markets? I mean, it's a very simple, but do you think that is the easiest strategy for anybody?
In this kind of market scenario, yes, because right now what we are doing is also following global cues.
We saw a terrible Wednesday. It was followed up by a great Friday. But are we in for more of such terrible Wednesdays, what we saw, Sandeep, last week? Like, maybe once in 10 days, maybe 2 or 3 times in a month, we will see mid and small cap stocks, they will get tested.
Yeah, it will happen for sure because a lot of people are buying blindly. People don't think that the markets can correct, and more and more speculative stocks are moving up more than the steady performance. So I think it will happen. And mid and small cap valuations for sure are at least 25% or more, even more expensive than historical valuations. On the large cap side, the overvaluation could be just 5-7%. So I think that's not very significant. But on the mid and small cap side, it's very significant.
Okay, point taken. So that's a view coming in on some of these names. But
Sandeep, I mean, Reliance has already moved up. It was looking cheap at the beginning of the year when we discussed. But what next? I mean, what really could emerge as stock of the year? Last year we discussed it was Tata Motors. Before that, it was Indian Hotels. What could be the stock of the year now? Or what could be stock of the year for rest of the year? Reliance to ho chuka hai.
So I think if you look at the valuation in the large cap space, it could possibly be some bank. So which bank is so maybe it could be HDFC also, it could be ICICI or Kotak. All of them are trading like Kotak and HDFC Bank are near 4 or 5 year lows. It's possible that we could see one of these perform, or it's also possible that because of the momentum in the auto sector, I think the auto sector outlook is still good. So I think a stock like Maruti also could do well, or some other auto company. I don't know, but I think these could be the sectors which could from here till end of the year do better than the Nifty.
Then Sandeep, we should look at there is a serious case to look at auto ancillary. I mean, my car had gone for servicing, and when the bill came, I realized that, oh my God, how expensive the auto parts have become. I mean, we talk about price hike in the auto cars because that's optically visible, but when your cars which are old and when they go for servicing and when the bill comes out, you realize that how expensive the auto components have been. I mean, we don't talk about it, right?
Like many auto ancillary companies have done well, and they continue to do well. So I think they have a export market as well as domestic market. So I think it's a choice. So on one side there are tire companies. So we have played it through Apollo Tires, Bharat Forge. We played it, but then I exited because I thought valuations became high. But I think long-term outlook out there is good. And then there are other smaller auto ancillary or even large ones. So I don't track them so closely, but you're right, there should be opportunity there.
You don't realize it. It's just that when the bills come out, you actually realize it. The only way I can say that my bills have gone down, I think I would say in case of telecom, but everywhere else, I think things are looking. But Sandeep, I want to go back to the consumer staple space, and everybody in a sense is aware of the fact that maal nahi bik raha hai. HUL 2%, Patanjali the same kind of data is there. If I take the price growth out, actually for Nestle, Cadbury, Britannia, the category is not growing. The stocks have not done anything in last 2-3 years. Now time-wise correction has also kicked in. They will never go at P multiples of 10-15. Is it time to think contra, considering that inflation, the base effect has kicked in and these stocks have corrected enough?
Yeah, FMCG is an interesting space where we have seen outliers. Also, you see Tata Consumer, you see Godrej Consumer. I think the way these stocks have performed, it's been totally out of sync with the rest of the space. They have done extraordinarily well. On the other hand, we've seen companies like HUL, Dabur, Marico, or many others underperform significantly. Now, volume growth will ultimately come back. I think last 2-3 years of stagnation will give way to 2-3 years of good growth. It always happens. So the consumer space should pick up. I am more positive on the durable side rather than FMCG at this stage, although FMCG will also present opportunities. So I think the consumer names on the durable side could do better.
Taken. In fact, on that note, Sandeep, we'll let you go. Thank you so much for making time and speaking with us today.